Hello, everybody. This is Alan Elman, the Blue Collar Investor, with a video invitation for you to attend our eighth presentation in our BCI educational webinar series. This one is titled Credit Spreads for Bull and Bear Markets. We're also going to be introducing our latest products, creating new investment opportunities, a credit spread calculator, an amazing tool that's taken us 2 years to develop, along with our latest books on a conservative approach to credit spreads. So that's the content for this upcoming webinar. So let me tell you some of the things we're going to be discussing at this webinar. First, as always, we start off with option basics. On this screenshot you're looking at now, we'll talk about how to read an option chain. Of course, much more. Then we're going to introduce the two stars of the show, the bull put credit spread, which we use in normal to bull market environments, even sideways trending markets, we could use that. But we benefit when the price of the stock stays strong. And we're also going to be discussing the other star of the show, which is the bear call credit spread, where we benefit when share price declines or stays the same. So those are the two stars, and we'll talk about when to use them, how to set up your trades, and how to manage your trades. All that will be critical to this upcoming webinar. Now, as you know, whatever strategy you're using, this is across the board, if you're seeking higher than a risk-free return, there are going to be disadvantages to that strategy. There are going to be risks. We're going to go into detail all of the great things that credit spreads have to offer, but we're also going to talk about the disadvantages of credit spreads. And that hopefully will help you make a decision as to whether or not you want to implement these strategies in your portfolios. Now, selection of the underlying security is important. You know, I've been talking about this now at BCI for 18 years regarding covered calls and cash secured puts, but the same really applies to credit spreads. And we're going to talk to you about how to select these most appropriate underlyings. The good news for those of you who are already premium members, and I know it's a lot of you, that the reports we provide to you are perfect also for credit spreads. You can see them listed on the bottom left of this screenshot. Even our stock report, we show a couple of rows in the right bottom with stocks that have been bumped from the report. We leave them on for about 3 more weeks because they're taking a turn for the negative. Those would be great for bear call spreads. So yes, if you're a premium member, you really don't need any other resources. Certainly you can look for them, but they aren't needed because you're already getting the reports. Now, once we've identified the underlyings that we want to use, what strikes are we going to implement? They're going to be out of the money, and some of them are going to be even deeper out of the money. So we're going to talk a lot of technical analysis, how to determine the most appropriate, most conservative, safest with capital preservation in mind, and yet still generating significant premium return. So we'll talk about that from a technical and calculation perspective. We're going to then get into an actual real-life example with General Electric. And you could see here in the screenshot that when we made the screenshots for the trade, GE was in a definite strong uptrend. And so is the market, as you could see on the left-hand side of the screenshot. Now, the market itself, SPY, was uptrending as well. And you could see to the right on the screenshot, we're actually going to access an option chain on the day that the credit spread was executed, explain why we selected each particular strike, and then we'll move on to the calculations. And then we're going to introduce our BCI credit spread calculator. You're seeing now a screenshot of the bull put calculator, which we use for GE, explain to you how to enter, how to get your calculations. It's very, very simple. Those of you who have used our trade management calculator, some of our other spreadsheets in the past, know that these are very, very user friendly. But at the very bottom, you could see that there's actually a total of 6 tabs to this spreadsheet. That's why it took 2 years to develop. And we'll go through the use of all 6 of these tabs, which help you enter a trade, manage a trade, get initial calculations, post adjusted calculations. It's very user friendly. The user guide is inherent in the spreadsheet. We'll go through all that for you in detail. And finally, we're going to introduce our latest book, The Blue Collar Investor Guide to Conservative Credit Spreads. You can see on the right side of the screenshot, there is a lot of information in this book. There are a lot of images that will help you understand the concepts behind the credit spreads. You can see also there's a bunch of appendices in there. So there are over 112 pages in the book, all information related specifically to these two credit spread strategies. Now, how do you register for free? Go to our website, thebluecollarinvestor.com. Click on the blog link and you'll see a widget on the right where the red arrow is. Click on that and scroll down to register for free. We'll send you the link the day of the presentation, but you will be registered. You can also register for our free newsletter. Every week, I write an article breaking down a trade. They all have educational value, I hope, in my humble opinion. And again, it's free. It'll be delivered to your email box 10 a.m. Eastern Time every Sunday morning. Just fill in your name and email, and you will receive the free newsletter. But in addition to that, you will constantly be getting updates on new events, new products, discounts, and so on. So I highly recommend signing up for our free newsletter as well as registering for this credit spread webinar. So that takes care of this video invitation. I'd sure like to see you on September 18th, 25 at 8 p.m. Eastern Time with our discussion of credit spreads for bull and bear markets. Barry and I are looking forward to seeing as many of you as possible. Thanks so much for taking the time to listen to this video invitation. Until September 18th, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.